Good morning, everyone, and welcome to the European crossover webinar. And apologies for the delay. My alarm didn't go off at all, and I didn't even hear it. And just by chance, I just woke up and just saw the time. So this is kind of crazy, but let's go on and get started here. So bear with me, and let me just make a notation here. One moment. Woke up about a little over an hour ago, and then I thought, oh, there's some time. And next thing I know, I didn't hear any alarm or anything go off. Kind of strange, but anyway, let's go and get started on here. So apologies on that. We are seeing the euro continue to go in and strengthen here. Let's go and move in here. One moment. Kind of crazy because I woke up all by myself a little over an hour ago, or hour and a half ago, and thought, oh, this. And but anyway, that being said, so we're looking in here to today, and there are no economic reports. I mean, current account, but we don't have anything coming here, even into the States. If you look here, well, leading index change. That's gonna be 10 a.m. Eastern, but essentially almost nothing here on the. So let's go and move this out of the way. And cable continues to stay well bid, as actually as the euro too. And the key thing to me about the euro was that not only did we close in initially, this was our interim target that we thought, okay, if we can make it up to 11.13 before we see a more significant pullback. And we actually not only went beyond the 11.15, we closed beyond it. So really the door is really open for the eventual challenge to come up here to 1547 right here. So we'll get to that, but just want to go and touch base on this quickly. Dollar index continues to remain under pressure. The peso, we've had two consecutive days below this 1923.6. Bear with me a moment. So you can see the importance, at least to me, has been the importance of this 1923.6, the pivot level, and how on the return rally, we lost steam, and once we lost 1944, the door was open for us to challenge the 1923.6. Now, I didn't expect it to bounce as bearish as I was then on the peso after it lost 1944. I thought we'd see at least a short covering bounce, even if it was just a part, even if it was a temporary bounce. I thought we would see that once we get down to 1923.6. We didn't see that, and in the analysis we've been saying is that if we got a daily close below that, the door was open for a challenge down to 1908, although our support below that was 1916. Well, we spent 2 days below that, and we're holding, but I'll tell you what, we need to get that close today above this. So really, the door can really open up real quick to 1908. So it's disappointing. We actually made a pretty good run before the close yesterday to rally back just above this 1923.6, and then we slid back. So a bit of a disappointment there. One moment. And dollar yen, we did see a little bit of a pair back, but it's still holding relatively well. The resistance has been 908. It hasn't even quite made it to 109. But as long as the SPOOs remain bid, and we're going to get to that, bear with me. You can see here, we're so close, we're basically right here at 3,000, but as long as they remain bid, it's going to keep the dollar yen with that pressure. And really, it's once again, we could be a whole lot higher in the dollar yen. So once again, as I said earlier in the week, it's almost like a mild rally, but we have held it. And, I'm still surprised that we've even been able to keep this level up here in the SPOOs. A bit surprised to say the least. Another market we'll touch on yesterday. Remember, we talked about the market trying to hold the 53 in the crude oil. I went in depth yesterday, and I'll actually go into that right now. How I thought that it was going to make that stand here. And let's go on and take a look at the crude oil on a very short-term basis. So my take was you saw on the daily that it wanted to hold that 53. So here we were yesterday and working on the 30-minute, and I said, look, for them to make the stand, it's going to be 52.74. If it can defend 52.74 on a 30-minute close, that's going to set us up for a long setup. And we did get that dip yesterday, and from there we're able to make that move. You can see we're towards the end of the day, it was pretty obvious that the market was going to be able to defend 53. So we just kept marching higher and higher and higher. One of the guys was asking me late in the day what we were looking at, what I was looking, because as far as the market moving higher, because I said, hey, well, we held there. And I said, well, the short-term target was 54.02. And you can see here, I'm just going across the levels. That's it. And we were running out of gas as we came into there. And we've only dipped minorly, but we're kind of still holding here. We can still see some further follow through. We'll look at the technicals. But this was the setup that I saw yesterday, because remember how we saw the daily go, hey, look, the crude oil is going to try to make a stand at $53 on the daily. Here's that potential long setup. We did see the dip held, and you can see then as we got later in the day, they basically just started grinding it, pushing it higher, basically chewing up any kind of offers. And here we are up here, and we'll see what happens next. You can see it on the 5-minute. It's been very, very quiet. Okay. Yesterday, we talked about gold all over the place here. With gold, we'll go and take a look at it on a 30-minute. I called it like a drunk man all over the road, because we'd rally up, we fail. We'd rally and make new highs, and we quickly fade a few dollars. Then we'd rally back up, quickly fade right back. Not a whole lot, but a few dollars, rally right back up. And really, to me, it was about, and we'll go and see this, we can look on this in a 2-hour. To me, it was about this second fall that we had, and really knocking people into short positions, potentially into short positions. So I think what we saw yesterday is those that probably got short, that they were looking for this market really to break lower after it broke a second time. It's those that they've held them and essentially, probably causing a little bit of short covering. One of the things that actually attributed to that was the fall that we saw here in the cash dollar index. So as the cash dollar index, we're looking for a move down to 97.89. Well, we got that, and I was looking for a bounce. We did get a minor bounce, but we've since was gone to our second area of support, which our bias chart support yesterday was 97.57. We got there, and it was that extra move lower that kind of pushed gold. Now, gold didn't go screaming higher. It could have, but it just kept pushing a little bit higher, a little bit higher. Anyone has been short just looking for lower prices in gold, basically the market was just taking them to task, so to speak. But it was, like I said, it was just kind of herky-jerky. Like I said, I called it the drunk man all over the road, new high, fall back, new high, fall back, new high, fall back, as we just kind of bounced around yesterday. Let's take a look here. We'll go on and take a quick look at the cross rates, and then we'll just do a quick little news bit, and then we'll get into the analysis. Today's the first day I actually don't even have a sore throat. I've been over the cold, but I've had a lingering sore throat. It's taken me a while to shake this, so that cold was really a toughie. But yeah, I'm feeling pretty good today. So I've still had a lingering sore throat. I guess you heard me coughing a few times throughout the week, and today's the first day I feel pretty good. which is pretty great. At least for me it is. But anyway, moving on to the Kiwi yen, we did finally break above this area of resistance. You can see I had the bias chart support and resistance levels. And let's go and take a look at this a little bit closer look. And the door's open actually for a challenge up here to 69.45. We're well on our way. You can see we finally broke out of that very tight range we're looking at here on the daily. But certainly we have that opportunity to go and move up here to 69.45. Looking here at the euro yen, we've kept the bid here. And, looking at the euro yen, and let's take a look at it on the daily. I had seen 2026 there, and obviously this has a lot to do with the strength of the euro. Let's give the euro props for once. But I'm saying is, I had 2026, and I go, okay, well, 2074. Now I thought there's still a chance we can push higher because what all was happening with the bunds, and we talked about since it's already last week. Hey, look at the bunds. We have a potential for this year to move higher, and boy, this year really has answered the bell in light of what the bunds have gone and done. But look at this. Wow, we have even pushed even beyond, although we pared back beyond 121. So pretty surprising move in the euro yen. Although, like I said, when you look at what the euro has done itself, then maybe not such a surprise whatsoever. One here has been a bit of this disappointment here is the euro odd, and obviously the odd has come back after the employment data, so we've kind of turned things around. We'll take obviously this big move in the guppy. Boy, what a move here! Almost making it almost to 142. I mean, just to get an idea of this move, it's just been wow, just a big, huge move here in the guppy. And this is where you've seen so much volatility. I mean, you've seen it here in the cable, but like in the guppy, well, I mean, it goes without saying, the move has been, and the volatility of the moves have been just unbelievable here. See a little bit also here with the sterling versus the yuan. Well, with that, let's just go on and move into the news. So we'll go and jump into that. Okay, let's go and get onto there. It says sterling trades near a 5-month high on Brexit and won steady after the China GDP. Don't have it this converted. Usually I put it on the little program that I go on and use. But obviously, like I said, with the late start, just taken straight off of Reuters. It says the pound traded near a 5-month high against the dollar and the euro after British Prime Minister Boris Johnson and the European leaders agreed to a new deal for Britain to exit the bloc. The yuan held steady against the dollar after data showed China's economy grew at the weakest pace in more than 27 years in the third quarter due to a costly trade war with the United States and weak factory production. Sterling's gains on the dollar helped push the greenback to a 5-month low versus the euro and a 3-week low against the Swiss franc. Initial relief at securing the long-awaited Brexit deal could be brief, however, because the Prime Minister still needs to sell the agreement to skeptical lawmakers when Parliament sits on Saturday. Once Britain does leave the EU, the economic growth is expected to slow, which is likely to be a negative for sterling in the longer term, analysts warn. Assuming we clear the parliamentary hurdle, the pound has room to rise further because there's a lot of shorts to be unwound, said Takuya Kanda, general manager. Here we go, general manager at the research department at Gaitame Research Institute in Tokyo. But after that, people will start to question whether this is really good for the Britain's economy, and the further gains in sterling could be difficult. So I guess basically is to tell you to expect a whole lot more volatility. Is maybe we'll still jump, and then maybe they'll think about it and we'll fall back and say, you know what, this isn't good. So we shall see. I guess more volatile times for the cable overall, even once we get past, if we do get past this whole Brexit. Another up against the euro. The sterling traded at 86.58 pence near a 5-month high at 85.77. For the week, the pound was on course for a 1.6% gain versus the dollar and 7/10 against rise against the common currency. Britain's new Brexit deal has a decent chance of clearing Parliament on Saturday, Finance Minister Sajid Javid said, but some investors are wary because debate so far on Brexit has been fractious and difficult to predict. Even if Johnson can win approval in Parliament, Britain is still on course for more distant economic ties and increased trade barriers with the EU, which many economists say will slow growth in the UK. China's economic growth slowed more than expected to 6% year on year in the third quarter, the weakest pace in at least 27 and a half years as demand at home and across abroad faltered amid a bruising Sino-US trade war. In the onshore market, the yuan traded at $7.0779, little change. Let's see, Friday's data marked a loss of momentum for the Chinese economy from the second quarter, 6.2% growth. The world's two largest economies have imposed tariffs on each other's trade goods in a dispute over China's trade war and industrial policies that has slammed the brakes on global economic growth. Worries about the weak U.S. economic data kept the greenback lower against other currencies. Yeah, let's go move this on. Let's see. Okay, and let's go move into the and let's go on and take a look here with the analysis. Okay, starting off with the year. It says year rally to 1140, closing above the intermediate target. And let's take a look at it on the daily. So it says year rally to 1140, closing above the intermediate target of 1113, opening an eventual challenge to 1547. Resistance is the 1160 with support at 1080. Well, actually, yeah, it does come in at 1160. The initial. Now, we do have the door open to come up here eventually to 1547, but for today, it's going to be 1160. So let's go on and put this in place. And the support here is the area that we were looking at previously before. Remember, see right here with the 1075, 1083, we'll split the difference. We'll call 1080 right there. That's going to be our buy chart support if we were to see this thing pair back. Certainly doesn't look like it's going to, but at least you'd be looking a general idea of what we'd be looking on a downside test. Let's go and move into cable. Okay. It says cable ripped higher on the Brexit deal headline, eclipsing 2980. Here's that 2980. Let's pull this back a bit. So it says cable ripped higher on Brexit headlines, eclipsing 2980, yet sliding back on reality concerns. Some of those concerns we just addressed on the news topic. Resistance is 2896 with support at 2802. So we're not very far from 2896. You can see it right here. So that's going to be resistance here, 2896. And support is 2802. So we're knocking on the door right here. We are knocking on the door. There's 28.96. Let's go and move into the Aussie. Says the Aussie rebounded on the positive jobs data report, closing above resistance of 68.09. We've been talking about that right there at 68.09. Immediate resistance is going to be 68.31. You can see we're knocking on the door here at 68.31, actually just a bit above it, followed by 68.81. Support is 67.90. So it's actually up here at 68.91. If we can go and push up in here, once again at 68, and I apologize, 68.81. But we've gotten above the 68.09. That's key, but it's not like a huge victory, to be quite honest with you. If you look at it and like, well, that's not really a whole lot. It's really the 68.81 we need to get above here. We were able to secure this close of 68.09. That's good. I mean, it's positive, and we're knocking on the door here, but the real resistance comes in at 68.81. So let's go and mark this here. Interesting that we're not seeing further follow through. Now, obviously, we're gently higher, but I would have expected us maybe at least 25 pips higher. We're just barely scratching up higher, but I guess higher we are going nonetheless. With support's going to be 67.90. And let's go and get into the Kiwi. Well, it says the Kiwi awoke moving higher for the day, but fell short of taking out resistance of 63.58 on a closing basis. So we were right there towards the end yesterday, but we hadn't taken it quite out yet. Support for Friday is 62.90. So we are above the 63.58, but once again, you know, it's just barely squeaking past this area. Let's put this a little bit in perspective. You can see we're a little bit, it might induce a little bit further short covering, but it's certainly nothing for the to run the bears out of their den in any way whatsoever. Resistance, obviously we're knocking on the door, but we need to push a little bit higher. The real resistance then is going to come in here at 64.36. So a little ways to go. Let's go with 64.36, looking further out. Obviously it remains bearish. And support's going to be 62.90. Let's go and move into the dollar CAD. Well, when this market broke lower, our resistance, what we referenced, was this 32.36. And I'm just going by the levels here. And like I said, you know, I look at the horizontal lines and I'll combine that with, you know, Fibonacci. I don't go into too many patterns or anything like that, so I keep it relatively simple. But you know what? Sometimes simple just works here. And although I haven't done anything here with the dollar CAD my own self, I haven't traded dollar CAD a little bit, but you can see we talked about that 33.36, the inability. I mean, after the market did a phenomenal turnaround when it looked like it was just really going to fall out of bed. And we kept saying, hey, it's all about 33.36. And you can see here, the market could never take it out. And finally, we even said this a little over a week ago. I said, I think it was last Thursday, I said, hey, gun to head, you could get short this market and just put your stop above 33.36 on a daily close. And then we saw the market sell off and continue. So our thought had been before was that we could make it down here to 131 because that confluence is here. You can see this level here, but it confluences also with the trend line. So you can see here we've fallen here into this daily area of support, 31.36, and the market's just holding here for right now. Looking at it here on the Asian analysis, which Blake's back from being out of town, obviously, and I'll do the Asian analysis during the night. So for the majors, so the Asian analysis for the dollar CAD states dollar CAD continued lower, tagging the daily support level of 31.36 on its way towards trend line support of 31 even. Resistance is going to be 31.95. Now, like I said, on this show, when we present the bias chart, just for those listeners that are new, and as I mentioned, you won't see any medium-term analysis. There is some because I did offer that in the pace. So I do look at things at times from a little bit medium-term perspective. And I guess I probably should have sold the peso my own self, but we talked about it was really disappointing when the peso came in, and I said, hey, look, if it loses 1944, that's it, overdone with. Bulls got no hope. That's it. We're going down to 1923.6. And so I'll look at things from a medium-term perspective, but generally the focus here on the show is when we're doing this analysis, you'll see me just say, well, he's just checking from levels to levels or whatever. The focus is on this bias chart is for day trading / scalping or whatever. Not everybody's a day trader, maybe only a few. But what many of the traders here in the chat room do, they'll incorporate these levels into their own trading for their own entries or exits. So when I'm looking here with the dollar CAD, the bias outlook is really an outlook for the course over the next maybe 3 days. Generally, could be a little bit longer. With our analysis, is these levels represent what's the expected support and resistance, whether we see some bids come in or offers. For that, these levels are generally good for the next 24 hours, from that day into the next day. So when we're looking here at the dollar CAD, this is what I think we're going to go to, which is 131 here at this point. And as we finish towards the week, we may just make that run right there. Now, this seems a long ways away, but my thought is, hey, look, it's really 31.95. There's closer because on the way down, remember we talked about 31.74. We can make the case for 31.74. But what I mentioned here with the 31.95, and I'm looking here at the daily, is really more about, even if we see a rebound, the real risk level to come in place is going to be 31.95. Meaning, let's say we see a rally back to 31.74. That is resistance. But to me, I feel the shorts are definitely in control. You can basically sell this thing and say, I got no worries until we get to 31.95. I'm not even thinking about it. You see what I'm saying? I'm in good shape. Hey, if we do rally here in the dollar CAD, my point being, the real fight doesn't begin until 31.95. So as we get towards the end of the week, then I start to lay, especially when we get breaks in the market like we see in the dollar CAD. Yes, if we're trying on a Tuesday or Wednesday or whatever, the range would be much tighter here, and I would think it'd be 31.74. But to give you an idea where this market is, even if we get a bounce, this market doesn't. Shorts don't even begin to even worry, and they're not even worried. But I'm just saying, the cause of okay, that's an interesting area. It's not going to be until 31.95, literally 60 pips away. That's my take on that. Even though, as I mentioned, the focus here when I do the bias chart is for very short-term entry levels, exit levels over the course of the next 24 hours. Okay, so hope I made that clear. We do have a lot of new listeners here here for for ForexAnalytix. So once again, I thought I'd just go and explain that. I know that Steve does great work. Blake, obviously the other guys. Amanda does fantastic work. So if you're looking at mine, you're thinking, well, it's just level to level. Yeah, that's it, because my focus is, and here on the show with the bias chart, is a focus on very, very short-term levels for the day over the next 24 hours. So enough of that. Let's go on and move into the dollar yen. So when you see the analysis, it's not that, it seems like it's just focused at with the short-term orientation. where I'm not saying, okay, it's a break in this arm, and if it breaks this arm, it's going to go to 1098 or whatever. It's mine a very short-term focus. Although I take into consideration like this huge weekly pivot, and my thoughts are that the resistance remains 908. Beyond that would be this weekly pivot, but man, this thing would really, it'd be unbelievable to see this market get beyond this 927 huge weekly pivot. But we'll go and move into the analysis. From the Asia analysis, it comes into this morning. It says dollar yen paired back 40 pips, but as long as equities remain bid, the risk is the stop. The risk is it stops above 908. Resistance is the weekly pivot of 937. Support is 839, and we saw this market kind of hold here at this 839. But you can see we're still holding up relatively well here, only dipping just a little bit. The risk is that those that are short may get squeezed a little bit as the market continues to hold up very well. But the risk resistance is going to be 908 with 927, a huge weekly pivot. So let's go and update that. Well, there it is. It still remains the same in there. So no changes. Let's go and move into the peso because I did just skip that. So bear with me. Okay, I did visit this a little bit yesterday. Excuse me, on the FX Daily Wrap Up, and so we did touch this, I think, a little bit yesterday. And since we're at the end of the week, that's one to go on references. So we talked about the significance of this pivot, this 1923.6, and once again, like I said, even though we're focused on very, very short-term levels here, when we do the bias chart on the European crossover webinar, and my analysis is very, very short-term oriented, I still look at the overall picture, although sometimes I may not reference it. Well, here's the case with the peso. What was my take all along? You would have thought, to hear me, you would have thought that I'd been a passionate bull or something. And I haven't done anything with the peso in quite some time. But my take has been, the technical picture straight up overall, and that we finally got above this 1923.6, saw this fabulous run, and then we saw a pretty big fall. And so even when it fell and kept falling, I kept the bias as bullish. Say, hey, look, as long as we're still above 1923.6, I'm going to give this thing the benefit of the doubt. And I go, hey, but this is the Alamo stand. It needs to hold this 61%. And it did, and it held this 1932. But when it did, it was like, okay, are we going to see a nice rally? And we just sat there like a bump on a log. Look at that, for days. Finally, we saw this reaction, and we were looking for a pause around 1985-ish. I think initially I was looking around 1982. It made up to 1985. I pushed it just a little bit higher, and it ran out of gas, just shy of 1986. All well and good. So I thought on the way back, okay, we're going to hold 1960-ish and 62, and then we'll see a bounce and see if we can challenge the highs. And we slid beyond that. I'm like, okay, well, a little bit of an overshoot. And the rally was really feeble. I think it only made it up to like barely even 65, if that. And we rolled over. So on the way down, I'm thinking, this is not good. This is not good. I mean, we came back further than we had after we did all this work, and then the rally was really feeble. This is really worrisome. But okay, we're sliding back. We've got to hold this 1944. If we lose this 1944, that's it. It's over, done with, so forth. And we did. And that's why I said we're going to go to 1923.6, the breakout. That's what we're going to challenge. Forget it, because bulls are going to be very, very disappointed. And sure enough, we broke that. Now, here's my take. I thought we would get a bounce off this 1923.6, and we didn't. I mean, I didn't even expect much of a bounce. I thought we were going to get a nice little bounce. I said, and you know what? Forget it. Sell it against 1938. 1938 against – well, heck, we didn't even get up to we didn't even make it up to, once it tested here. I mean, we did almost get there and jump back up, but we really didn't get a real test once we touched it, even past the 1932 area here. And my concern is, and we said our overshoot value is 1916. And we did see the market kind of hold there, but the problem is with the analysis, we stated, hey, look, if we get a daily close above 1923.6, it opens the door for 1908. 1908 was a good little reactionary point on the way up in here. And we've seen that, and we saw it again yesterday. Now, we did see the peso come back towards the end of the session, even take a 1923.6. I thought, wow, this is amazing. but we ended up starting to give that back. Here's the deal, and I mentioned this yesterday. This pair bulls have got to close to get above 1923.6 to have any hopes of forget a bullish picture. I know there's some cases for, if you look at it from a long term, this moves. Look, my take is at this point, once again, I'm more short-term oriented, and I'm not short-term oriented when I'm looking at it right now just for the day. But my take is, just to get some short covering, just some plain old short covering, we need to get above 1923.6 before the end of the day, and we need to get there lickety split quick. Okay, so if we do, then potentially after being sub 1923.6, we can make it up to 1938. Maybe we can even make it as far as 1944. If we can get this rally back of 1923.6, but if we don't get that by above by the end of the day, and we finish down here for the week, to me, at least to me, it looks like 1908 is just already a done deal. Probably make it down to 1902. That's my take. If we close the week under this huge pivot. So anyway, let's just go on and move on to the analysis. Just want to share that, like I said, since so quite often most of the focus is on very, very short-term levels. So I'll give you the analysis. If once again, I do the basic technical analysis every day, post it, during the early part of the Asian session, gives a heads up of what we're looking into here for the majors. So here's the readout on that. It said, dollar peso spent a second consecutive day below 1923.6, the breakout level. Here we go. Support level 1916 was successfully defended by the close. Okay, bulls need to finish the week above that breakout level to generate any thoughts of short covering. Now, you can hear what I'm saying. Not that, that's just my take. I'm not even saying this thing is bullish in any way whatsoever. I might be wrong. I'm just saying that's my take, and I'm just going with the technicals. I don't have an extra grind. I haven't traded the peso in quite some time. Once again, like I said, my trades are so short-term oriented. I just don't feel comfortable. I don't like to hold trades, whatever, but there's been some nice moves in here which could have capitalized. And if I was so concerned that if we lost 1944, hey, why not get short? Well, we just kind of started to drip lower and lower, but we did drip lower nonetheless. But nonetheless, my take is this thing is not bullish in any way whatsoever. That's my take. But if the bulls have any hope of at least generating some short covering, that's all I'm looking at. They need to get above 1923.6. So once again, it says bulls need to finish the week above the breakout level to generate any thoughts of short covering. Resistance above the breakout remains 1932. Support on the sell-off is 1908. So I'm going to be a little bit generous. You could almost say, well, the resistance is 23.6. That is correct. But if we do get past that and we're looking into the early part of next week, that's what we'd be looking at for resistance would be 1932. And here we are. Move this down one digit. And here we are, 1608. I'm going to move this down to 08 because we've already come down to 16. There we go. We've already done the peso, the yen. So let's go move into the cash dollar index. Now, since the early part of the week, we were looking for a move down to 97.89, but I thought we'd get a bounce. Now, we did get a bounce initially about, I think looking at the euro, I think it bounced like about 20-some pips. But look, we've turned around and really started to slide back. We actually went down to our bias chart support from yesterday, which was 97.57. You can see that here. Let's go and look at the analysis for the dollar index. So it says the dollar index fell beyond the weekly level of 97.89, challenging the support at 97.57. Resistance is the prior, meaning the 97.89, with additional support at 97.20. So if the wheels do start to fall off the caboose a bit, it's going to be, we're looking at 97.20 down here, right there. You see that? Right there. You see him coming across there. Let me go and move this here. There. You just move that just a bit lower there. It's going to be 97.20. So let's go on. And there we are. Let's go and move into the cross rates. Be interesting to see how this week places out. I mean, obviously, I think Euro bears or shorts, we would call it, are going to be under pressure. But we're keeping that bid here. I think it's more about that. Obviously, the Brexit thing is going to have such a great influence. We'll see how the rest of the market trades today. And gold will be a little bit interesting. I think that has been more about holding shorts a bit hostage, new shorts, and obviously with the weakness in the dollar, so provided that extra little bid here in gold market. Let's move into the cross rates. Obviously, we're really pushing the clock. I've decided, as I mentioned, I've spent some extra time here. I want to call it describing the process, but explaining some of the analysis here. So let's go move into the cross rates. So looking here with the Kiwi yen. There we go. If we get this push, and I think there's a potential for that, it's going to be right there at 21.12. We're not that far away. Let's take a look here. Just a hair above here, right there. You see that? That is 21. Let's call it 21.19. Hmm. 21.19. Oh my God, we're getting confused. Hang on. Looking at the euro yen. Here we go. There we go. Hang on. Oh, right there at the 127% extension right there. But it is the end of the week, so can we squeeze it a little bit further? Potentially we can, as long as the equity stays strong. We're just going to go on and go right here with this 69.45. And we're going to let's take a look at this on the daily. We're not quite a bullish mode yet. Let's go on and so we're going to keep it bearish for now. And on the support, it's going to be right here, which was resistance before, 68.76. Right here, 68.63. 68.63 for support. Moving on to the euro yen. The euro at the very least seems like it wants to retain its bid, and the yen may see some further weakness as we go into Friday. I mean, to the close of the week. It's going to be right here. Right there. $21.18. Support right there. 20.39. Let's go into the euro on. Well, with the strength of the odd, I'm a bit surprised here. I mean, even though the odd strength, I'm surprised that the euro couldn't even find some additional, little, push even further. So it's interesting to see that. But I'm going to give the euro the benefit of the doubt here, and we're going to say right there at, guess it's 62.67, and we're going to go on in. We had 69, we'll drop it 2 pips. We're going to keep that here. I'll drop it to 7, but essentially that's holding there. And resistance, right there, 63.27. Moving on to the Euro Kiwi. We have even broken below that, right there. You can see that, which comes in 74.44. With resistance, right there, 75.26. Moving to the ASEAN. We finally started to break above on this thing. Let's take a look at it here on the daily. Doggone it. Oh, I did have it. I just didn't have daily selected. There we go. Some nice resistance coming in there. Good volume resistance. We're going to go just right there. The tips. I don't even believe they'll make it. It could all the way up to 74, 73. So we're going to say it's 74.48. With support coming in at, I think that's pretty clear, 73.41. And let's go move on to the guppy. interested to see how much further we could push here, but this is a good low level here right there. So let's go with this 40.63. I'm not so sure that we can push a whole lot higher. Call it 43.60. Apologize. 40.60. Get a little carried away calling it 43.60. And support, let's go and take a look at it on the 2 hour. And support is going to be right there. 38.48. Let's move on to starting on. Fairly well defined here. 89.48 on the downside of 87.34. And there we are with today's bias chart. So thanks for joining us here on the European crossover webinar. We did touch the other markets we mentioned about crude and gold. And gold's kind of funny. Like I said, I think it's new positions were put on for shorts a few days ago. And I think those are the ones that I want to say they're being taken to the woodshed, but they're being pressured as we've seen the dollar sell off. Like I said, and it's a mixed bag. Crude oil's holding around that $54 after defending the 53 successfully yesterday. Don't see anything necessarily there at the moment. But thanks for joining us here, and have a good luck. Have a good day trading. Thanks for joining us here on the European Crossover webinar.